Well, good morning, everyone. Got a little bit of a late start today as the market I tried setting up just before the market opened. I had some problems with my USB. My camera wasn't connecting, my headset wasn't connecting. It did a reboot, so seem to be up and running now. So sorry about that. Markets are in rally mode right now, although we're off of the highs of the day. So just to kind of give you some perspective of where we are, what we're looking at from a market perspective. I mean, the Dow, the futures were down triple digits in the Dow. The NASDAQ 100 futures, the Russell, the S&P were all down. The Dow was down as much as 300 in the regular session in the cash market. I think it cut that loss down to about like 25. Now it's down. It was down 115. It's down 88 right now, this very second. So we're going to take a look at the charts today and see if we can make heads or tails of what direction this market wants to go. The market, as you remember, was down really aggressively on Friday. Asian markets were down this morning. So this morning, Asia time. Remember that when our markets were correcting on Friday, Asian markets were already closed for the weekend. So they didn't have a chance to price any of that bearishness in. They were reacting to what had happened in the U.S. markets on Friday, and they reacted accordingly. I saw that the Nikkei was down 800 points at one point. I think it closed down about 592 points, so that's about 2.5%. So if U.S. markets end up today, Asian markets will get a boost from that. Of course, we don't know if that's going to happen. I mean, we're still only an hour and 15 minutes into the trading day. It's 8:45 my time right now, so that's 10:45 on the East Coast. I'm glad that I did not go bearish on my Autodesk position because of the fact that the markets are rallying so hard today. I've been fluctuating. My bottom line here has been fluctuating triple digits up or down most of the morning. You know, Apple has rallied. It's off of its highs, but it's rallying pretty aggressively. Win has been rallying pretty aggressively. Win seems to be close to its highs for the day. So I'm losing money on those positions because those are bearish positions on Apple and Win. I didn't really do anything on Intel because that's pretty much, you know, as long as Intel doesn't go down too much, that's my broken wing butterfly. So as long as it doesn't go down too much, I should be okay. If it expires at a $70 loss, which is my max loss I can have on this position, that would be ideal for me. Kohl's looks like it's basically flat. It's up 10 cents. It was down. The underlying was down, so my position was up earlier in the morning. So that has, you know, from the standpoint of the underlying, that has rallied and has recovered. Emerging markets are up 17 cents. They were up a lot more earlier. So my long call had recovered some value. My short call is down 30 bucks today. I still have open profitability on that short call. I may look at, if I think that these markets are going to rally for the remainder of the week, probably buy back that short call while I still have some credit on it or still have some profit in it, and let that long call ride for the remainder of the week and make some profit that way. So not quite yet ready to say it's time to take a bearish stance in these markets because, you know, this has been the MO of the market. I mean, anytime anything's been able to knock the market down, whether it was bad news on North Korea or what have you, the markets quickly recover. You know, political news out of Washington, whatever, these markets have recovered. Now, the rally that occurred on Friday is a little bit different because, or sorry, the rout that occurred on Friday is a little bit different because it didn't seem to be a reaction to headlines. It was a reaction to market conditions or fundamentals. And the big thing, if you did your reading over the weekend, the things I was reading over the weekend was that the market was basically reacting to the rout in bonds. So what are bond markets doing right now? Well, if I look at the futures, the 10-year futures are, if I look at the futures on the 10-year note, okay, they're basically flat. I mean, up 8 basis points, which is relatively basically nothing. They were up a lot more earlier in the day, or earlier in the morning, and actually in the overnight session. So they were up, I think, on the fact that equities markets were down. People were moving out of, investors were moving out of bond markets. Maybe they had their money sitting in cash, but they were also moving out of equities markets as a reaction. Seems like some of that money might have gone back into bond markets. Usually you find that bond markets and equities markets are inversely correlated. So when stocks are up, bonds are down. That was kind of disconnected on Friday. Both bonds and stocks were down. So let's go ahead and take a look at some charts, shall we? Let's start with the S&P. Now, one of the things that I did over the weekend was I took a look at the major stock indices and I drew these trend lines, okay? And I tried to draw them as accurately as possible because, like, one of the things that I was looking at was if you look at it over time frame, like I don't want to be too short term about this. So I initially had started by drawing a trend line, or a trend channel rather, on the daily chart. And if I draw it on the daily chart, like I can show you what I would come up with. I would draw something like this. And if I drew something like that, then that shows they rallied hard. The S&P rallied hard out of this channel, and it's coming back down to earth right now, and it's going to bounce off of this. It's going to move down and then bounce off of that upper bound of the trend line, which, if you look at it, that's what it's done. Okay? Now, if you look at the chart that I drew on the weekly price action, tells a slightly different story, which is that yes, it broke out of that top channel, but it came back crashing down, and now it's back in that channel. So in that event, you might expect it to go down here where that oval is, and actually I would move that oval probably just a little bit lower because it's going to move to the midpoint, or I should say I would expect it to move to the midpoint of that channel, okay, which it could still do. Just because the market is rallying today, the S&P is rallying today, doesn't mean that this move down is over. It just means that it's retracing a little bit. So which chart do you believe? Well, you can actually kind of believe both. I mean, it's not that they're both wrong. I mean, what you would expect to happen on both counts has happened. But in terms of predicting what it's going to do in the long term, I would believe the weekly chart over the daily chart. And that meaning that I would believe that this rally is only temporary, and even bouncing off of that upper bound of the price channel that we draw by looking at the daily price action, that there's still a chance that it's going to move down. Because what's it going to excuse me, what's it going to do? If it rallies up, I mean, is it going to bounce between these two upper bounds of these price channels? It very well could. There's nothing saying that it couldn't. In which case, the S&P is going to slowly grind higher. and it's going to be very, very choppy, right? So that's a possibility, right? It could rally hard again and bounce up out of that, bounce up out, bounce up into here in the stratosphere, which is where it was before. That to me is less likely. It could also kind of come back down into this channel, right? Penetrate it down and move down to this mid-range, this midpoint here of the weekly price action, maybe even move down to the mid-range of the daily price action channel. Okay, both of those are possibilities. If I had to put odds on it, I would say the odds are probably what has the most odds is a bounce between these two channels, the upper bounds of these two channels, right? Next, in terms of likelihood, would be a fall, penetrate back down into the channel and a fall to one of these two mid-ranges here. And I'll actually, and I'm going to draw two ovals to indicate that as being two distinct possibilities. So then, target 1 would be here, target 2 would be here, okay? The least likely of the scenarios right now, I think, is a rally back up out of this channel into the stratosphere. And the reason why I say that is because previous resistance becomes current or future support, and it didn't act as support here. So what does that mean? How porous is this line here? I don't know whether I could expect it. I think that this still holds as resistance. It doesn't hold as support, right? The price action has shown that. The first time it tested it, it didn't act as support, okay? So I think if it tries to rally back up out of this channel, I think it's going to have a hard time, is what I think. Now, if we look at, so that's just looking at the trend channel, right? Looking at it from the standpoint of what do the stochastics tell us, which is my favored kind of momentum indicator. The stochastics still tell me that there's more of a downward move that can happen. So if I look at my shorter term stochastics, if I look at my 1 minute, 4 minute, 15 minute, 1 hour, okay, we're in rally mode right now. That's today. Like this, this market can still rally today, okay? If I look at my longer term, which for whatever reason my 4 hour isn't drawing a stochastic, but my 1 day is, my 1 day, if I maximize that, shows me, this full K hasn't even reached the 20 band, the 20 threshold. Okay, I think it's going to continue doing that. The 1 week, we have a confirmation on this histogram, the stochastic histogram crossover. Okay, and if we look at the monthly, all right, this bar is still forming because we're only 5 calendar days into the month. It's the 5th of February right now. So this could certainly turn into a bounce off of the 0 line and a rally. However, given the fact that we're looking at a downward trend in the histogram, usually you don't see a reversal like that, although it can happen. Okay. Now the fact that, if I expand this enough that I can actually draw a trend line, you'll see what I'm talking about, which is, it's not hard to see. I mean, this is downward trending. So I'm going to expect that to continue. Until maybe we hit, I don't know, this point here. So that's going to take us out, possibly to April. Of course, you're not going to see it on the daily chart or the weekly chart because these are shorter time frames. But if we kind of adjust it for the weekly chart, maybe that might give us a better picture. So let's try that if my computer wants to cooperate. In fact, we could even go here. Right about there. Oops. And then extend it. Let's expand the time that we're going to look at. And by the way, you can probably, whatever platform you're using, you can probably do all this. There's probably just going to be a different way of how you get there. So I'm not going to tell you what platform I'm on because I don't make endorsements. I just say, this is what I'm using. Those of you who've used this platform before, you'll probably recognize it, so it's not hard to figure out. Right, we'll go figure. Look at the monthly chart. Because what I'm trying to figure out is, okay, how long can we expect? I mean, if we're heading into a downtrend, at least from the standpoint of the stochastics, like how long can we expect this to go? Now, if looking at the monthly chart, it tells us probably about till April. That doesn't mean it's going to be a straight line down till April. There's going to be some bounces, but it's going to be overall downward trending. That is, if you believe that. So anyway, while we're waiting for that to draw, let's just take a look at where I am now. So now I'm upside down. Win has rallied some more. Apple's about where it was before. Looks like Autodesk has come back a little bit. The emerging markets haven't moved a whole lot. Remember last week I put on, I think I said this, last week I put on a short call, which I'm still sitting on some profits there. If I think that emerging markets, if this is just a temporary blip and emerging markets are going to continue to rally, I would take that off. I don't know that I'm necessarily convinced of that just yet. Let's see what the futures are doing. So this is the NASDAQ. This is a 50-minute chart that we're looking at. You can see that from the open, open at 7:30, what happened? It shot all the way down. It hit this pivot. Yeah, I think that's a pivot. So there's a study here called pivot points. It's probably the same calculation, for any platform that you're on, but basically it takes a look at the previous day's price action, what was the midpoint or halfback, and then it calculates levels of support and resistance up or down based on that. So This dashed line here is my Fibonacci. I drew a Fibonacci. I can show you how I got there. I'm going to take that off for a second so that we can see just the midpoints. So this is half back from Friday's move. It rallied down to the first pivot point and hit it to the tick and then bounced all the way up. And now it almost hit the midpoint here and it is falling. Now it looks like it's kind of trying to make its way back up again, so it might try to rally again and hit that midpoint. And if it does, then what we're going to want to watch is, okay, does it trade through that? Or is that a level of support, or rather a level of resistance that is just not going to penetrate today? Okay. Now, keep in mind, whenever you draw levels of support and resistance, if you're using Fibonacci's, if you're using a pivot calculator, if you're just like eyeballing levels of support and resistance on a chart and you're drawing lines based on that, you're not always going to see a hit right to the tick. I mean, yeah, the markets have memory, but sometimes that memory gets fuzzy. You know, don't, if you were short and you decide I'm going to take profits as soon as it hits this pivot point, if it hadn't hit the pivot point, like, and you didn't get a fill, then, and you tried to stay in, like, oh, it's going to hit that pivot point, it's going to hit that pivot point, I just know it, you would have been in a world of hurt all the way up here. So you have to be flexible. Please be flexible with your levels of support and resistance, okay? You know, don't, if it seems like it's turning against you, take the profits that you've got, okay? It's not going to work perfectly. Same thing with moving averages, right? Or stochastics. It's not always going to move perfectly. You know, be flexible. Recognize when momentum is moving against you and neutralize your position so that you don't get hurt. So that's kind of where we are from the standpoint of the NASDAQ. If we look at the S&P futures, we'll probably, you know, we'll see it. So here's a great example, okay? The pivots that were calculated for the S&P futures, it came down, but it didn't even touch. Still, it rallied hard off of that. Now the midpoint's quite a bit high, which tells me that, you know, the S&P was either trading in a larger range on Friday, or it's trading in a smaller range today. One of those two things. If we look at the Russell 2000 futures, same thing. Hit the pivot, actually went a tick below that, or two, it might have been more. Rallied off of that, and now it's in kind of correction mode. It's going down again. You know, didn't even, you know, it could still make a move towards that halfback. And then finally the Dow, which the Dow was interesting because the Dow moved the most on Friday as a percentage. It hit the pivot, traded through it, came back up, rallied hard. It's here, you know, at 426. You know, if it wants to hit halfback, it's going to have to get up here to about 25. You know, what is this, 687, 688, somewhere there. So it's kind of where we are. In terms of other futures, you know, dollar's up 35 basis points, so dollar showing some strength. Gold is up. Gold was up a lot more. It was up 35, 40 basis points earlier in the day. It's only up 3, so it's come back a lot, you know, quite a bit off of that. Crude oil's down on probably not just dollar strength, but also fundamental weakness. And again, you know, the 10-year note is up, but, you know, might as well call it flat. All right, let's try this again, because I really want to see how this looks from a weekly time frame. So that doesn't really work. I mean, that would tell us it's going to go all the way out to October of next year. And it could be a difference between, you know, am I on a log scale on my monthly, but yeah, so I'm a log scale on my monthly. but I'm not on my weekly or my daily. Yeah, that's the issue. Still not accounting for 100% of that disparity between the two time frames that we're seeing. But really, I think it makes more sense. Oh, that's level. I mean, we could like do something like this. But that hasn't gone all the way out to 2022. Drawing trend lines is both an art and a science. So I don't know how realistic it is to say that, this is going to decline along this trend line all the way down, all the way out to 2020, September 2020. If it does, that would be pretty scary, but it's just something to keep in mind. I mean, we are on a downward slope. Now, could it do something like this right here, where it was on a downward slope, it was way high on the histogram, fell sharply, crossed down, but that didn't sustain that downward momentum. Fundamentals kicked in, or buying kicked in, whatever, and pushed it back up, and then it kind of chop back and forth across this zero line here. I mean, this was leading up into the Great Recession of 2008, right? So we had, flying high, like, I mean, the histogram doesn't go all the way back to the dot-com bust, or leading into the dot-com bust, so we don't know what happened here. Chances are this whole area here was probably green, but dot-com bust, boom. We saw that last for, what is that, 2 years before it rallied and recovered, and then we hit 2007, Lehman Brothers goes down. In March of the following year, Bear goes down. Boom. That's what we're seeing. So, what would be, this is downward sloping. Doesn't mean it's going to continue. Something's going to have to happen to cause the histogram to cross back above that trend line. For right now, we don't see what it is. We're looking at what we're looking at. So really, I think probably the most accurate way to draw this trend line would be to have it cross right there. In which case, we could expect this to fall down to about here by November of the current year. And then after that, it's anybody's guess. I mean, I drew the line here just because, and maybe I should draw it a little bit higher, just because it seems like it's about the midpoint of this histogram right here. I don't want to take it all the way down here. I think that's probably too pessimistic. Just what my gut tells me. That would be a good target. Now, another good target would be midpoint of this histogram, which is about there. And of course, worst case scenario would be maybe here. So April, May, of 2019. Crossover point anyway. But keep in mind that we could have a reversal of fortune. So we just want to monitor this on an ongoing basis. Okay. So I look at this chart and it tells me watch out ahead. I think that this market can be treacherous. I think if you want to trade this market, pick your spots well. Don't allow yourself to get whipsawed, because it can happen. Flexibility, I think, is key. Don't take on a position that you can't unwind when you need to. So what I mean by unwinding, for example, now I'm not managing this very well today. You know, when I was bullish on when it turned against me, I had a short put, which I bought back on Friday when was moving down with the overall market for a profit. And I think that now that it's up today, I'm losing profit on my long put. And if I were to look at what is my year-to-date profit, when I looked at it on Friday afternoon, I had about a $300 or $400 profit on win. And my year-to-date, so now like I'm flat. Because yeah, this is basically giving back profits. Now, what do I think win's going to do today? Well, I mean, it's been in rally mode most of the morning. Didn't want to do that. So what story is our indicators, or what story is our indicators telling us? Okay, we're kind of in a downdraft now. I mean, we rallied hard, you know, from the beginning of the morning session. So this is not over yet. This is going to continue. So as I look at this, Right now, I think win is in play in this range here. I think it's going to continue to bounce like this. I set the bounds of this rectangle because it's where the closes are for the day. You know, it's trying to fill this gap. It's come close. The gap is, you know, whatever it is between here and here. But there's still a downward momentum to it. So something's going to have to happen to cause it to come out, to break out of this range again. Point being that I believe for now, if I really want to be active about this, which I think I kind of have to be, I can kind of play the bounces. So if I believe, which I do, that this rally is taking a breather this time of the morning, okay, I'm going to have an opportunity to either sell this put when I'm a little bit less unprofitable, so I've recovered some of what I gave back, or sell a put if I think that this rally is going to continue for a period of time, which it looks like it is. So I think either one of those is my option today. I'll be watching it on the 1 and 4 minute charts to see what it does. Once I see that this, I want a confirmation that this full K is going to cross over below this full D. I do believe also that this full D here is making its run down towards the 20 threshold. Once it's done that, then it's time to make a decision about when. And it would probably be just to sell those puts, because I don't like trying to play chop and slop. You don't make a lot of profit, and it's just frustrating. It's a lot of time and energy, and it can really rack up your transaction costs. So once this 4 minute bar will close at 9:20. It's 9:18 right now. We're forming a crossover. So I'll be paying attention to that to see what that does. We're also going to want to, or I'm also going to want to figure out what to do with Apple here. You know, I still have calls that are profitable that I sold. I sold this as a spread. So if I think Apple's going to continue to rally, I can buy this back. This is going to be a short video because it's 20 after 9 right now. I do take a break at 9:30, which is 11:30 East Coast. And then, assuming no technical difficulties getting back up and running, then at 1:30 East Coast time, I'll be starting the video again. So 1-4-15 1 hour chart is telling us that this upward move is taking a breather. There's some more downward momentum. So on a 1 hour chart, we're creeping up. Four hour, 1 hour tells us that there's some short-term, intermediate term, I should probably say, upward momentum. You know, this weekly chart was a big decline in the stochastic. I mean, from week to week. So, I mean, going into earnings, this downward momentum was already occurring. I mean, if you remember, that was concerned about the production cuts on the iPhone 10. Then earnings came out, and the earnings were, I mean, Apple beat. It was a narrow beat on both the top and bottom line, but Apple got hit by downgrades and reductions in some price targets and concerns about whether or not the iPhone supercycle is now dead. You know, I love how prognosticators come out based on one day of price action and declare, you know, the bear market is dead, the bull market is dead, buy and hold is dead, passive investing is dead, active investing is dead, Bitcoin is dead. Everything's dead until it comes back to life. So we'll see. I mean, the question is, does Apple need an iPhone supercycle? I mean, I don't think they're the ones that told you, analyst community, that their company was dependent upon a supercycle to be successful. The things that they were talking about on the conference call was about installed devices and building services revenue around those devices. iTunes Store, you know, Apple TV, you know, that stuff. So I'm sure they're very smart people, but sometimes they can be very myopic. So just a few observations I wanted to share from a fundamentals standpoint. So what do I think Apple's going to do this morning? Well, let's draw the Fibonacci and see. Started here, rallied to here. These aren't Fibonacci levels. I have these set as a default for a different reason, which I'll explain another time. These are probably already by default on your platform, so don't worry like you have to have these memorized. If you do want to know what they are, though, just Google key Fibonacci levels. Okay. 23.6 is not a major Fibonacci level, right? It can be a level of support or resistance. Obviously, it was not a level of resistance. It was semi-level of resistance here. I mean, it did pull back, but then it rallied through on the next 4-minute bar. So there's a strong possibility that this can trade through down to this 161.61 level. So I'll be watching it to see if it does that, and if it does, I will probably wait for it to get close to that 38.2. I'm not going to hang around and see if it breaks through, because chances are this is going to be a pretty firm level of, I think, level of support at that point in time. I will buy this callback and let that long call ride. Here's win again. Let's do the same exercise. Okay. Interesting behavior. It's always great when your computer just does whatever it feels like. Just love that. I'm not going to bother with any of those other things, just in the interest of time. So this 23.6, it actually acted as support here. You know, didn't so much here. I mean, this is the daily action. I kind of missed it. I wish I'd been looking at this earlier. It did move down here. That would have been a good time to either sell my put or sell a put against it. So that's just bad luck on my part, bad timing, if you want to call it. This was around 8:30, was actually right around the time that I was just getting back up and running. So that 4-minute bar that we were looking at on the Apple, would have formed by now because that was at 20 after. It's 9:28. Another, so 2 have formed since then. Checking see what the futures are doing. So look at this. This is the Dow. Dow's kind of turning over. See, look at this. So seeing some chop and slop here. You know, sometimes when you see this, histogram's going to cross over. Whoop, no, it's not. It's going to cross down. Whoops, just kidding. Going to cross over. I'm going to go up. Oh, no, I think we're going to go down now. So that, you know, I yell at the market like it's a person. Like, make up your mind. You know, I'm not going to participate in this. You know, call me when you've made up your mind. So I like what I'm seeing here. You know, full K leading below the 20 threshold, full D following it. Critical question is, what's it going to do when it hits the 23.6? Now, not only is this the 23.6 on the fib, but it's also a pivot point. And right now it's trading through both. Pretty handily too. And you can see that that's reflected by the fact that my loss is narrowing here on this position. I'm getting back more of my value on this short call here. So given the fact that we've got downward momentum here on the 4-minute chart, we've got downward momentum here on the 15-minute chart, I'm happy with what I'm seeing here. I'm seeing the potential for a crossover here. First of all, the full K crossing back below the 80 threshold, that's, this is telling you, okay, overbought. So a crossover and confirmation is a good thing. Crossover and confirmation of the full K over the full D would be another good thing. Depending on, where, like if it gets here to 38.2, like I said, I don't know if I'm not going to stick around. I might wait to see what it does. Could it go all the way down to the 50? Yeah. This 50% retracement, could it go all the way down to the 61.8? Yeah, it could. I think that the odds against that, I think the odds of that happening get smaller and smaller the further you move down. What else I want to look at? Autodesk. Another tech issue. And since that's going to want to take some time to load, so I think you can tell what I'm looking at in the futures. I mean, Dow has rallied. It's off the highs of the day. It's become very bearish from the standpoint of this 4-minute chart. On the 15-minute chart, it's approaching these two moving averages, the 27 and the 9. So this 27 was raging towards the, the 9 was moving up towards the 27, was going to cross over, and then it curved, and it doesn't look like that crossover is going to happen. So when the price touches what I would expect to see is a crossover, because we're about to see a histogram crossover here, and the fact that upward momentum here in the 1-hour chart appears to be waning. This again, this is about time frames. From a 1-hour time frame, this rally has become long in the tooth. It's a little overextended. It's coming back, right? These 1, 4, 15-minute time frames are leading that. This was Autodesk. So this was the position, this was a diagonal or a calendar that I put on. And the reason why it's a diagonal is because it's a cross in terms of expirations. So this long call is a March 16th expiration, the short call is on March 16th, and it's diagonal because it also crossed strikes. So it was a 115, 125. That was almost like a buy right, like buy a call or buy the stock and then sell a call against it for income. The idea here is that if Autodesk stays below 125 on Friday, then this call expires worthless to the buyer, and I keep the premium. Now, the problem is Autodesk continuing to go down is hurting me on the call side. Do I want to liquidate this completely? Well, if I think that this rally doesn't have legs, then yeah. Or I might want to roll that call to a lower strike in order to convert this from a bullish spread to a bearish spread, so I become a net seller of premium rather than a net buyer of premium. And considering the fact that 4-hour daily time frame, it's a tough call. Because if I look at what Autodesk is doing, this was a rally out of the channel, came back down to earth, fell in, rallied, tried to rally a little bit, fell, came back down to earth. But if I look at it from an alternative viewpoint, which is this, what that would tell me is this has traded down. So it's an opposite view, right? It now traded down through an outward channel. Did I say outward? It's traded down through an upward channel and kind of rallied back into it. And it tried to penetrate but didn't succeed, and now it's bouncing back into it. So the decision that I need to make is this going to rally to this 125, right? If it does, at February expiration, which is the end of this week, right? If it's at 125 or above, and actually if it's at about 118 or above, I'm going to make some kind of profit at expiration. It's just a question of the size of the profit. Will it be 1,000? Or will it be $6.50? Or will it be $1? I'll move that alert because I don't need it anymore. what I am going to do, what does Mr. Fibonacci tell us? It came up to a 61.8 retracement, close to. Hit the 38.2, traded through the 50, hit 38.2, kind of penetrated below it, went down to 23.6, and now it's rallying off of that. So if it closes here, then it's not crazy to expect it to rally back up to the 50 or even the 61.8 again. Which, I mean, it could be at by Friday. That's not really helpful. Somewhere between. I mean, it's not really. Retracement shell is not going to help. This might. If this is to be believed, this regression channel. So this is the mean. So this is a regression to mean here. So it goes. Look at the properties of this, and this is probably like 1 or 2 standard deviations. It's 1 standard deviation. If I were to change it to 2, that's not going to change your midpoint. But now it's contained. The price action is contained within this. So this covers, 95% of your contingency since it's 2 standard deviations. 1 standard deviation, I think, is 68%. So if it rallies back up to the midpoint, or if I think 1 standard deviation is sufficient for our purposes, because this price action has just been so wild, it's going to be here. So if Autodesk trades to 125 or even trades through, so seeing where this closes today is going to be interesting. Judging by the 1-hour chart, I think it's going to close above. I mean, it's correcting, but it's slowing down. You know, could hit this 38.2 and bounce. So I'm going to sit tight on Autodesk for now. Let's check back in with Apple. Let's take a look at those futures. So that's the Dow. Now, I think when we last looked at it, it was almost triple digits. It was like 95 down, 80 down, 85 down, something like that. Now it's down 145. So it's moving back towards the lows of the day. And again, looks like that's going to continue. You know, once this bar closes, which it will do in 13 minutes, you know, we'll know for sure. So it's approaching this 38.2. Question of the day is what's going to happen when it gets there? This crossover is looking pretty weak right now in the face of declining momentum from a 15-minute time frame. If you look on the other side of that, this 4-hour, you know, the 4-hour, it was declining. Now it's rallying. From the day we're not rallying, but I mean, we're turned the trend of the histogram around. So it's anyone's guess. Oh, see that? Now we've traded below the 38.2, and now we're heading towards the 50. So I want to see what full D does here. We already have on the 15-minute chart. Remember earlier when I was talking about if I see a full K crossover below the 80 threshold, that's one indicator, and then if it crosses below the full D and stays there, that's at the close of the bar, then that's another indicator. That tells me that both of these measures are moving down towards the 20 threshold, and we're continuing to decline. We're continuing to deteriorate. Apple's looking like it wants to touch that 50. Maybe even trade through it and get us to the 61.8. And look at that. This is a reversal from an overall time frame with the exception of when Apple and Autodesk are moving with the market, with the NASDAQ right now, and by extension S&P and the Dow. When is bucking that trend? So I'm hoping I don't have to capitulate by the end of the week, but I may have to. Before the end of the week, but I may have to. Yep. All right, it's 9:51 now. I said I was going to take a break at 9:30. I didn't. I'm still going to come back around 10:30 or so. So thanks for watching. I will see you in about an hour and 20 minutes, or hour and 40 minutes, which is 11:30 Eastern.